Hello, traders. Gary Wagner here. It is Thursday, January 21st, 2021, and this is the daily report for gold and silver. We had moderate moves in the precious metals today, specifically gold and silver, and a very strong stock market. On today's show, I want to focus upon the massive expenditure of fiscal stimulus and how, although there is optimism now with U.S. equities moving higher, we still have yet to face the economic fallout that will most definitely follow once the pandemic concludes. Let's take a look at current pricing. In terms of action in the precious metals today, you can say they were highly dominated by dollar weakness. U.S. dollar is currently fixed down almost 0.5% at 90.055. That's a total decline of 41 points. With this new administration having an aggressive stance in terms of combating the pandemic, revitalizing the economy, and getting this country vaccinated, we know that that is going to require an enormous amount of capital, including the $1.9 trillion proposal that President Biden put forth last week. We're up to $6 trillion in terms of expense. The $6 trillion expended so far came in 3 rounds. The first round was by Treasury Secretary Steven Mnuchin with a total bill of $3 trillion. We then added round 2, which was about $900 billion, and then this final proposal that President Biden talked about last week is an additional $1.9 trillion. As we look at this dollar chart, we can see that it has come down from 104 to about 90, or 14%, since April, and a lot of that has to do with the vast expenditures that we have allocated for fiscal stimulus, a total of $6 trillion. To put that into perspective, when we compare that to the Emergency Economic Stabilization Act of 2008 to help resolve the banking crisis, the Secretary of the United States Treasury created first a $7 billion Trouble Assist Relief Program called TARP and a $840 billion stimulus package under the American Recovery and Reinvestment Act of 2009. The total cost was $1.5 trillion. Never in history has this kind of money been expended. And because of that, it is my belief that we will see the dollar continue to drift much lower. Gold basis the most active February contract gained $3.40 on the day, or about 0.2%. It is currently fixed at $1,869.90. And when you compare the net gain of 0.18% to the decline of the U.S. dollar, which is 0.44%, you can see that there was fractional selling in gold futures today. As we look at this daily chart of gold futures, what we can see is that the market did move higher, 1870.40. However, it closed below its opening price, so it did sell off. And as we noted when we spoke about the dollar, that this was absolutely dollar related. Although we did see a slight and moderate gain in gold futures pricing today, it is not enough to convince me to re-enter the market from the long side. As you can see, current pricing for Forex or spot gold, 1869.80, is roughly 10 cents away from the most active February contract, which is why people are now beginning to move into the April futures contract. Nonetheless, they are coming into alignment. Of the precious metals that we follow and actively trade, meaning gold and silver, futures and Forex, it was silver that performed the best. Percentage gain, almost a full percentage point, 0.93%. Current fix, $26.50. And at least for the short term, I continue to remain more bullish on silver than gold. This is simply because of the industrial component of silver and the fact that we have a real possibility that the equities markets will continue to run hot. As you can see, we opened above the 23% retracement. That is important. Closed slightly lower on the day. And once we do trigger a buy signal, my target will be $28 per ounce. Traders, as you know, we are maintaining our long positions in both GLD and SLV with a mixed bag in terms of results. We are looking at the Spider Gold Trust, currently fixed at 175.28, and that puts it down under 0.1% on the day. Traders, we are looking at a weekly chart, this of SLV, and I think what is most noteworthy is the current close that we received in the marketplace today. As you can see, it's trading at 24.15, but what is interesting to me is I believe that it is trading just above a former level of resistance. It was based on yesterday's tops as well as a series of tops that we can find here, and the fact that from September through December it was not able to break above that particular price point. Maintain your long SLV shares. However, it was the iShares Silver Trust that gained almost 0.6% today, a total of 14 cents per share, currently at 24.15, and we remain long both GLD as well as SLV. And traders, lastly, I do want to take a look at GLD. GLD closed at 175.28. But the only issue that I have with it is you can see the series right here of bottoms, meaning that we are currently at a resistance point, and I want to see a clear and solid close above that price point. Maintain your long GLD. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.